Welcome to what I think is a very important video presentation for people that have quite a significant amount of silver and even some of the smaller silver investors. I'm going to go through a quick story as to what I have seen recently in the gold physical market and why I think that the same thing is going to happen to silver, and it's actually going to stump a lot of investors, which is why I've taken a little bit of time to put this video together to talk about my experience in the physical market and what I predict is going to happen with silver. So I'm predominantly a gold investor, and I have some silver. The reason why I like to own silver is I like to buy silver when the gold silver ratio favors silver. So when gold is expensive against silver, I like to potentially sell some gold, buy some silver, and then wait until that ratio adjusts slightly in favor of silver, and then I will sell the silver and buy gold. And in theory, over time, you should be able to build up your gold reserves without actually putting any extra capital in. You're literally swapping assets. There is a bit of a problem with silver though, and the story that I'm going to mention is the recent gold price increase that we saw because of the Israeli conflict in the Middle East. What we saw was the gold price went up in terms of pound sterling. So I'm in the UK, I'm talking purely from pound sterling experience against gold. It basically just made a new record high against sterling, the gold price. There was something that I kind of expected, but I kind of was a little bit surprised by the scale of the problem in the physical market. What we saw was that the gold price was going up because of the spot price was going up because of the capital flows into gold during times of conflict and geopolitical events such as the Israeli invasion. What we saw in the physical market was that there were no buyers that were willing to pay a premium for gold coins, gold bars. The only way, I have some contacts, so when I have gold to sell, I reach out to people and deal directly because we have a business relationship. I could not sell sovereigns, I could not sell gold Britannias to people that are normally willing to pay the market rate. These are not people that haggle with me. They know I charge a fair price. They will effectively just say, yeah, I'm in the market, I'll take those. When it came to what happened with the gold market, they was not able to buy. They wasn't interested in buying. The only way I could make sales was selling below the gold spot price, and I did not expect that. I didn't expect that at all. So physical premiums actually turned negative. Why did physical premiums turn negative? A couple of things happened. The gold price went up. There was a lot of people. I mean, let's be fair. The gold price went up, but it went up quite quickly. It had been underperforming, and all of a sudden it went up within the space of a couple of trading sessions. So it happened quite quick. There was, in my belief, there was quite a few people that had bought quite cheaply, and then all of a sudden they was in the money. So there was a flood of supply of gold into the market at this higher spot price. I think the buyers were just a little bit hesitant because we've seen it before. We saw it in Ukraine when the invasion of Ukraine happened. The gold price went up. The premiums were much more healthy. I remember the day that the invasion was announced and people were paying a good £40 an ounce premium to get physical. There wasn't much physical being offered. This time round, completely different story. And I think that people would sort of remembered what happened because the gold price spiked and then it dropped, and that was actually, in hindsight, a very good selling opportunity. And I think that those same buyers had seen what happened in the market in the previous Russia conflict with Ukraine, and they thought the same thing was going to happen. So the buyers just was not there. So what I'm thinking and why I'm thinking this is going to be a big problem for silver, a couple of reasons. So this is a silver interactive map. So it shows you, and this is from the Orionum website, and I've gone back and I've adjusted the date range to show you 2 years worth of price action. Any country that's lit green means that silver has gone up against that currency. Any country that has a red color means that silver's gone down. If you look, major economies, the US, Eurozone, UK, if you bought silver 2 years ago, you're actually at a loss. I have seen investors that have taken pictures of their stack. I've seen it on Twitter or on social media, people that I speak to. There are a lot of quite well capitalized silver investors out there, and a lot of these investors only go for silver. There's not much gold in their portfolios. I know through speaking to these people, they are waiting for the silver price to go up. They believe the silver price will surge one day, will break out on the upside and go up. I completely agree with that. The problem is going to be when the silver price goes up and breaks out. We know silver is a much smaller market than gold, so silver can move a lot quicker than gold. It doesn't need as much capital to move the silver spot price. I think that what we're going to see is the paper price, the futures price, will break out on the upside one day for silver. You are going to get not just a flood of silver on the market, you're going to get a tsunami of physical silver on the market, because all these people that have been sitting in losing positions and have been accumulating silver at quite attractive prices, I believe they are all waiting for the day when silver starts to break out. They will start to sell their portfolio and their silver holdings on the market. The problem is, I believe there is a very strong chance that it will be an offer only market. I don't know where the buyers are going to be. Everyone has seen in the past, you don't need to be that experienced of an investor to see what silver does. It flatlines, it spikes, it comes straight back down, it flatlines, it spikes. So who's going to buy on a spike? Everyone's waiting for this spike to begin to occur so they can offload their silver. Who's going to buy? And this is the problem, because I think that you are going to get so much physical silver offered in the market, and there's going to be some buyers, but not in size. I don't believe so. So what's going to happen, I believe, is that the spot silver price will go up, and then there will be a race to the bottom to find buyers. Everyone is going to bring their premiums down, and in the end you'll find buyers, and you won't get the returns that you think you're going to get. You will be selling a lot under the spot price in order to basically liquidate your silver at the same time that everyone else is trying to liquidate the silver. There is a caveat to this, because you have bullion dealers. You can call these bullion dealers and you're able to sell to them. The problem is, if you think about what a bullion dealer is, they are a market maker. They will find a seller, they'll then take that stock and sell it to a buyer, and their profit is the spread, the difference between what they bought that stock at and what they sold it at. If they are buying kilos and kilos of silver and they're not selling it, they're not going to take that risk on. They're seeing the spot price go up, and their prices are linked to the spot price on their website by design. They're going to end up saying, we are not buying silver. And so that avenue is going to be exhausted. I don't believe that bullion companies are going to help you unless you buy silver from a bullion company that has a buyback guarantee. If they have a buyback guarantee, I don't see how they can refuse to buy your silver when you're wanting to sell. But if you're buying from companies that don't have buyback guarantees, I think you're on your own. So this is something to make you guys think, because there are a lot of people that believe a lot in silver. I believe that the silver price will one day outperform, but you are probably going to want to sell in an offer only market. There's just not going to be buyers, and I think that is going to it's going to cause people it's going to be difficult for people, because I know people that have been stacking silver for years waiting for the next opportunity where silver breaks out. I'm hoping, for these people's sake, that what we see is a gradual tick up and a very slow bull market in silver. That will be fantastic, because you'll shake out the weak hands early on, and then you will see a sustained bull market. But we know from experience That doesn't tend to be what the silver market does. So just plan your exit. If you are a big silver holder, plan your exit, because I believe you are going to want to sell when everyone else is selling, and that you're not going to get the returns you think you're going to get.